Hello guys, how are you doing today? Nice to have you back. Let's try and join the live. Share the live with your friends. Double tap your screen for yeah. Double tap your screen. Like the live, please. Today we'll be having a weekly outlook for EURUSD. Let's just wipe off all of these drawings and see what next week, what we should be expecting next week. Going to the higher time frame level, starting from the weekly. Let's see what we've got in the weekly. As discussed on Thursday and yesterday, our targets, I told you guys that the market will be coming to this level. As you can see, it has broke past this level, and we still remember that the market is still very much bullish, but as at this moment, it's bearish because it's pulling back to the discount level. The internal range of the monthly candle. When we check the monthly candle, we'll see that this candle, December 2025 candle, has a range, that is the range high, and the low is the range low. So the high of the monthly candle of December 2025 will be acting as the external range. The low will be acting as the internal range liquidity. So, like I said, there will be high chances that this market, this January of 2026, is going to be pulling back to sweep the low of the previous month, which was December 2025. So that's our anticipation, anticipating that this low will be serving as an internal range liquidity. So we're going to be expecting something of this nature, a sweep, tap into any other block, any key level here, then before we start our bullish movement, targeting the external range liquidity, which is going to be serving the previous month high, which December high will be acting as the external range liquidity to be targeted. So this is going to be our plan. But like you know, we're not going to be trading from the monthly time frame. So let's go down to the weekly to see what that looks like. So as you can see, we are targeting this level. This level happened to be a resistance level that was broken, and the market has since not come back to test it. This was the low that is very close to it, but this low did not tap. So this low will be acting as liquidity first of all. So if at all, we're going to be targeting this low first, targeting this resistance that has turned into support. So we have this low here to be targeted first. We have that low to be targeted. I guess you can see. Bring it down a little. So we have that low to be targeted. We have a key level here that will possibly be acting as a support to push the market higher. But for me, I still believe that this market, as you can see, this candle is very bullish. You can see this week closed very bullish, very bearish. I mean to say, this week closed very bearish. So there's high chances that when the market is going to be opening on Monday, we may have some pullback to tap into any key level around here. Then we'll continue this bearish move again to around this level, so this level will be acting as the monthly low, previous month low, the internal range liquidity that we're assuming that this market will come, sweep, then our main bullish move is going to start. So any bullish move we're going to be seeing here before this level might not hold, might not be the move that is going to take the market back to these highs. So we might just have a temporary pull, a temporary bullish move, but we should still be expecting that the market will come this low. Okay. So we'll be targeting at least this first key level. Then we have an OCL level here. Then we have the monthly December 2025 low to be targeted as well. So we're going to be looking if there are any key level just below this December low. So if there's a key level here, then we should be expecting that the market likely will come tap into it. So with that, let's go to the daily time frame to see more. Okay, so this happened to be the December low, and this happened to be the liquidity that is resting close to the resistance that possibly will turn into support. Under this resistance here, under this liquidity here, we have a key level here. We have just one key level as well here. We have one a resistance zone to support. We have an OCL level here that the market might tap into. But like I said, the chances that the market will go up or reverse here fully to the upside is very slim. So possibly what's going to happen, it might just give us some fake out, act like it's going, then drop back again. So after this sweep of this monthly low, that is when the main move is possibly going to start. So going into next week, as you can see, you can see that this last on Friday reacted from this key level. Finally reacted from this key level, this V-shaped key level. This one, it's a V-shaped key level here. That's where it's reacting from, or that's where it reacted from. So we have a rejection. So we have daily rejecting daily here. So we're going to see what's going to happen. Now remember, if we go to 4-hour time frame, we'll see those places that we made some analysis on. I told you guys that if the resistance is broken, then there's high chances that the market would go up, will buy. But if it's the support that gets broken, then the market will go to sell. At the end of the day, the support got broken and the market sold off. Even during the news as well. So going into Monday, as you can see, we have the market is still very bearish, but now we've seen a rejection here because we've gotten to a daily level, a daily key level that we've seen some rejections here, some reaction. So will this reaction be able to make this market buy a little? Now you can see there are some fair value gaps here that need to be filled. We have a level here. Yeah, we have a daily level here that has not been, that the market created the key level here. It swept, created the key level. So the market has not come back to reject from it. So going into next week, and you can see that this level acted as was the support level before, right? Or the support level before, using the line charts. You see a line chart, that was the support level before. So this level is going to be a strong level. It was a support level before. Now we have it as the place where the market swept. This bearish candle swept this bullish candle, created the key level here. Created the key level here that the market has not rejected from. So any main move that's going to happen now, I think the market would want to come back to this place, buy towards this direction, possibly. Then once it rejects from here, then we'll push down to this low before we go. But again, you can't tell what the market will do. So one day at a time, one step at a time. So we are at the closest level that this market can get up to. We can now go to the 4-hour time frame to look at what this level looks like in the 4-hour. So following our range trade, we had the previous high we had was let's see, okay, those were the market swept, created this low, okay, moved there, created this low, okay, good. So this was our protected high we had. This was our protected high. This was our range high and our range low. It has been broken. This range low has been broken. So we have this high to this low. Now this has been broken in a 4-hour. So we're going to use our fib to measure the likely place that this market might pull back up to. And like I said, or like you know, it should always pull back to the premium level for it to sell. Since we are selling, our market we should expect our market to pull back to the premium level before we think of taking sales. So we're going to be using the Fibonacci to see where our premium possibly is going to be. This is our high. We have a new low, a new lower low being created. So we're going to take this, track it to the new lower low. Okay. So we have the 38%, 38.2%, 50%, 61%. So we should be expecting to take our trade anywhere around this region, at least from the 50% upward. So any zone around this side, we should be thinking of taking our trade from it. So our trade is going to be, we're going to look for a zone, a fresh zone that has not been used around this area. So when the market pulls back to this area, then we're going to look for a confirmation to take our trade. Now following that, let's look at those zones that have not been used. Those fresh zones that have not been used. We have a key level here that has not been used in a 4-hour. I have a key level here. Let me expand this a little. We have this key level here that has not been used. 1. Remember, I'm considering just those that are above this 50%.